welcome to our first session in 2023. And the session is pretty heavy. It's about understanding the annual audits. We'll try and make it as approachable and easy as possible. If something doesn't click, if you have questions, please keep them till the end of the session. Ask after the end of the session, and I'll be very happy to answer your question. The one thing I really want you to take away from this session is that only the auditors have the ultimate knowledge of the annual audit. Not one of us here is an auditor, and we're not expected to know and understand it all. So sometime when we don't understand something about the annual audit, we just need to ask questions, because it just shows good involvement in the process, good management, right? And if you're in a management position, and good oversight. So we're not auditors, we're going to learn, and if we have questions, we're going to ask those questions. And normally the auditors are happy to answer questions, just because otherwise nobody wants to talk to the auditors. They have this reputation of being the most boring kind of accountants. Don't say I said that to your auditors. Okay, so understanding annual audits. So first thing, we're talking about First Nation community audits in this session. We're not dealing with profit-oriented businesses or non-profit audits in this session, just because there is a lot of information, and our sessions are tailored to First Nations. So first of all, we want to make sure we understand First Nation audits, which are quite unique in their structure and in the information that's provided in there. First Nation audits are public information, and there is a government website that's provided right here, where you can obtain an audit for your First Nation or any other First Nation you're interested in. When you go on that website, it's listed alphabetically, so you'll just choose the letter of the first name of the First Nation and find all the audits. I believe it's last 6 years that are there. In addition to the audits, chief and council compensation is also public information and may be posted on there. Okay, so what's the purpose of an annual audit? So it's pretty straightforward. Annual audits are required by all our funders, and they're also required for accountability to members and to the funders. So accountability is the main purpose here. Audits ensure accurate financial reporting, and they also act as a fraud deterrent. So, you know, because an audit can identify, can uncover different transactions, then if somebody is about to commit a fraud, but they know auditors are coming, we're hoping it'll deter them from doing the improper things within our organization. Okay, so let's talk about the auditor's work. So the auditor's work's main purpose is to ensure that our records are correct. The reason I want to speak about this is because there is sometimes this misconception about auditors that they're here to find what's wrong, right? So the purpose of their work is not to find anything wrong. The purpose of their work is to prove that everything is right. So let's keep that in mind. And anytime we have to deal with the auditors, they're really the allies for our organization. They're there to prove our records are right. Sometimes you have some younger audit professionals that just come out of university or other type of school, and they've learned this thing called professional skepticism, and they can act as if they're questioning or interrogating while they're working with us. Well, that just means they don't understand the purpose of their work. And if it gets to a point where we're really not enjoying that communication, maybe we should speak to their supervisor and say, you know, we're here on the same team. We don't appreciate the approach. Do your work by proving our records are right. Okay. So just because we have an audit done on our records, it doesn't mean that it will identify every single error, every single small error, or even every transaction that could be misappropriation or fraud. And this is because we have limited resources. If the audit were to check every single transaction in our records, it would cost way more money than we want to spend on it. And so what the auditors have to do in order to make it efficient is they have to take what's called a risk-based approach. What that means is they gain the knowledge of our organization and they say, okay, this is a risky area. Maybe I don't have good controls, I don't have good processes related to maybe payroll. So I'm going to spend more time on that. And also they use what's called statistical sampling. So instead of testing all the transactions in our records, they would choose a sample of transactions and test them to source documents, and they check that those transactions are right. And based on those tests, they'll make a conclusion about the audit overall. So this is important to remember. Just because we had an audit done on our records, it doesn't mean that they're 100% accurate, but they're big picture-wise, they're accurate and correct. For what matters to the users, to our funders, to our leaders and our members, they're correct, okay? Sometimes we run to a situation where an audit was done and then maybe a year later we uncover some misappropriation, some minor fraud or something like this. That could happen. So let's keep in mind that the auditors aren't there to catch everything that they consider minor. And what they consider minor could be major to us, right? Because if somebody's committing a fraud, it could be a minor amount, maybe it's $500, but it's still a big deal to the organization. So just because we have an audit done doesn't mean that we don't have to worry about our processes, about controls to ensure our staff are honest, and that all fraud and error are prevented. Okay. So let's talk about what's included in an annual audit for a First Nation. So first thing, we have the main audit. So this is a set of financial statements, which is about 30 pages long, depending on the scope of operation of the First Nation. And what it has is the auditor's report, which is the report the auditors give us to say, yeah, we did the work, your records are correct. Or maybe in unfortunate situations, it says we did the work and your records aren't quite correct, and we'll talk about it. The audit also has the financial statements, right? So the financial statements for the fiscal year. And then it has notes to the financial statements. And those are just explanations and some additional information regarding certain items in the financial statements. So that was the first element, the main audit, which is about 30 pages long. The second element, which is in a way sometimes more important even than the main audit, is our schedules of revenue and expenses. So those are income statements by program. So when we have funded programs, say from Indigenous Services Canada, CMHC, and so on, or even if we have our own source revenue programs, every program would have a revenue and expense schedule. So money coming in, all the expenses, and then surplus or deficit at the bottom. So schedules of revenue and expenses are important because this is what our funders use to decide how we performed for a specific program, for specific funds and stream. So the main audit, the first main financial statements, which is about 30 pages, is going to be used to assess the overall health, financial health of our organization. So they look at certain indicators and they'll say, okay, it looks good. You're doing well overall. But those schedules of revenue and expenses will be used to decide whether there is a surplus for a certain program that needs to be repaid or is getting carried over to future years and has to be tracked and spent accordingly and reported for. So those schedules of revenues and expenses are really, really important, and we need to pay a lot of attention to what goes in there. Okay, the third element of the annual audit is chief and council remuneration schedule. So that happens to be probably the most talked about schedule at the band meeting at my communities. I'm not sure what yours are like, but it's definitely raises a lot of interest at band meetings. Then the fourth element is senior managers remuneration schedule. So if we have what's called unelected officials, so we may have, the health director, maybe the band manager, education director. So as long as they receive overall compensation of over $50,000 per year, the government requires that they're included on that schedule. Now, that schedule can be contentious as well, right? Because people aren't so happy to share their overall compensation. And what goes in there is their wages and salary, but also their travel and all sorts of other expenses that they could have submitted and received. And so keep in mind that one is also kind of important to review prior to finalizing, because some people aren't comfortable with the information provided in there. Most of the time, names aren't going to be shown on there for the senior officials. It would just say health director or education director, but everyone at the community knows who that is, right? So that can become a little contentious. What I do is a process for both chief and council compensation and senior managers remuneration is I run it by them. I just get the amounts and send them to them individually before we finalize the audit, just so there are no surprises and so that they can, have their input. Because in one instance, we showed a very large compensation for a counselor, and then turned out the auditors mistakenly included in their $50,000 cash withdrawal for a community event that the counselor went and did for the community. So things like that. It's important to kind of pay attention to those schedules because they're sensitive when we're in a position of working with the auditors, right, and preparing and approving the schedules. So the fifth element of an annual audit is audit management letter. So during the audit work, the auditors come across all sorts of process improvement potential and recommendations. So what they do is they issue this letter, it's called audit management letter, where they identify issues that they've discovered within our financial reporting processes, and maybe some internal controls, maybe some fraud and error prevention, and they say, okay, here are the issues, and here's what we recommend that you do. So really, this letter is designed to help us, right, improve our processes, and it would be a good procedure from our perspective to review that letter and try and implement the recommendations from there. Now, that is all good, saying that audit management letter has to be submitted to the government. So it goes to ISC and CMHC and all your funders, okay? And so they see, when they assess the health of our organization, they see the audit management letter. And sometimes when we get a management letter that's like, 3 pages long and shows a bunch of issues with our internal processes, it's not a good indication of financial management in our organization. So definitely pay attention to that audit management letter. And if you are in a position to review it before it's finalized by the auditors, it's very good to review it and kind of discuss certain points with them, because I do find that sometimes they carry over points from the past, but they may no longer be relevant, or sometimes they have a misunderstanding of the process. For instance, to give a good example, I had an auditor at the tribal council that a management letter point was that there were no receipts submitted for travel expenses. And so it was on the management letter saying that travel expenses aren't appropriately supported. What the person didn't understand is that there are approved rates, like for most organizations, approved per diems, and then you just submit a travel requisition form which gets approved, and that is your support. You don't have to submit receipts as long as it's within the approved travel rates. And so we just had to explain that to the auditor, and then that audit management letter went away, as an example. And then the last element of the annual audit is CMHC housing financial statements. So CMHC require a separate set of financial statements for their program. Okay, so let's talk about the auditor's report. So the auditor's report, again, that is the ultimate product that the auditors give us at the end of the audit. So that report says whether our records are accurate or not quite, provides an opinion whether our records are correct. So an auditor's report can be clean, or what's called unqualified, or it can be qualified. So qualified means that something in our records isn't quite correct. So our goal is to always get a clean or unqualified opinion or report. And whenever there is a qualification, whenever we have a qualified report, we want to understand why it's qualified. Because when an auditor's report is qualified, it states right there something isn't right in our financial report, in our annual audit. And every funder, every person reading the audit will see that. And that's not a good reflection on our organization. Okay. So in rare instances, there is like an even worse opinion than a qualified opinion. So there can be an adverse opinion, which is a negative opinion. A negative opinion basically says nothing is right. The records are completely incorrect. Okay. Or there can be a disclaimer of opinion, or it's also called a denial. And this happens when the auditors weren't able to perform their work. A good example is one of my clients had a fire at the band office. It was many years ago when we didn't have electronic records. And so all the records were destroyed in that fire, and there was no way for the auditors to perform their work because they had all the supporting documents gone. So in that case, they would issue a denial of opinion. Now, both adverse opinion and disclaimer or denial are really bad things. This is when we go into a third-party management as a First Nation. At least that used to happen in the past. Nowadays, if you have a denial of opinion for a serious reason, it probably could work with it. Definitely with an adverse opinion, there is not much we can do. That just says we're not managing properly. So let's look at some examples of auditors' reports. Okay, so the first report, the first example here, is an example of clean or unqualified opinion. Okay, so an auditor's report has 2 pages in here. This is all kind of legal or accounting language. It's standard. It is dictated by the Institute of Chartered Accountants, or Certified Professional Accountants. Chartered Professional Accountant, yes, that's what we are, sorry. So so the institute issues a form that everyone has to use. So those auditors' reports would be exactly the same for every organization, with the exception of the name and the dates. Everything is going to be exactly the same. And the thing that's most important for us here, because it's a standard form, it just describes the work the auditors do and the responsibility of our organization, the management in the audit. So the most important thing for us here is the first paragraph. So whenever it's titled opinion, that means it is a clean opinion. So really, when we review an audit, we go to the auditor's report, and first thing we do is we check, is the first paragraph titled opinion? And if it is, we're good. That means the auditors gave us a clean report and our records are accurate. Okay, so let's look at an example of not so clean opinion or a qualified opinion. So you will see here the form of the opinion, like it's going to be the same 2 pages. The only difference is the first paragraph is now titled qualified opinion, right? Instead of an opinion, it's titled qualified opinion. So we know it's not a clean opinion, it's qualified. So then in this case, your second titled paragraph here would have an explanation of what the qualification is, what is incorrect in those financial statements, or what is making the auditors uncomfortable, because certain things aren't necessarily incorrect. Just the auditors may not be able to audit them and come to certain conclusions that they need, and that's what they put in there. So for this particular First Nation, they made an investment in a startup. They gave a loan of $3.6 million. And that loan had repayment terms. So every quarter, the startup was supposed to pay back for the loan. And like it normally happens with startups, everything went not as planned. So things got delayed and the startup wasn't able to pay the loan. It was still operating, it was still receiving funds, and everything was just delayed. The launch of the product was delayed, and the development process wasn't going as fast as they were hoping. So in the eyes of the First Nation, that was still a good investment. There was just some delay with when they were going to repay the loan and produce some profits for the First Nation. Now the auditors look at it and they say, look, you're showing an asset, a receivable, you're showing 3.6 million owed to you from this investment, but they haven't made any payments since last year. So is this really worth the $3.6 million? Is there a certainty that this money will be received? And they could not at that point conclude that there is certainty for the money to be received, so they had to qualify the opinion. Now, before they did that, we had discussions, and obviously we didn't want to create any issues with our funders because we have a qualified opinion. So we contacted the funders and we told them, look, the auditors want to qualify their opinion for the $3.6 million loan. Would that be an issue for you? And the funders reviewed it and they said, you know what, because you made the investment not using our program money. This was own source revenue money used for investment. It wasn't at ISC, it wasn't CMHC or Health Canada. They said, we don't really care. Qualify the opinion, no problem. So in this case, this qualification doesn't really hurt the First Nation. But it's an example of a qualified opinion. Okay. Okay. So now, if you remember, in the main audit, we had the auditor's report, which we just talked about. And then the next part is, of course, our financial statements. So we have our balance sheet, which is referred to as a statement of financial position because we're a nonprofit. We have our income statement or statement of operations. Again, because we're nonprofit, we have to call it a statement of operation. We have a cash flow statement. So that's more of an accounting exercise, just showing where the cash flowed during the year, to what activities. Maybe there were some loans, maybe our operations were in significant deficit, and so on. So that statement is really most of the time is an accounting exercise, and it's not very meaningful to the users. It just has to be done as a part of the audit because of accounting standards. And then we have a statement of changes in net debt, which is, we'll go through it, but basically it shows what happened with a net debt of a First Nation. Did it increase? Did it decrease? Given some details. And again, that one is more of an accounting exercise. It's not necessarily meaningful to people who are not accountants. So in general, when we review First Nation financial statements, we normally focus on the balance sheet and income statement, and it's the same for our funders when we review it. So then after we have financial statements, balance sheet and income statement, we go to the notes and schedules. And so those notes and schedules that just provide additional information for certain items on the financial statement. A part of the notes is so-called accountant motherhood. So they're required by accounting standards to be there. And if you're not an accountant, you probably won't enjoy reading for them. There's not much meaningful information. And even if you're an accountant, you won't necessarily enjoy reading from them. So if we have an audit, just to take the fear factor away, all these notes that are behind the financial statement, we start reading and it's kind of like, gibberish. It makes no sense. Just skip it, because lots of these notes, they're for accounting standard purposes, so that the auditors meet the accounting standards. And if it doesn't provide meaningful information to you as a reader, then it's not meaningful. It's not a note for you, and that's fine. Okay. And then we talked about audit schedules, which is a separate statement. It's about 100 to even 130 pages, because every program in there would have an income statement, right? That's the one the government will use to decide whether there is a surplus or deficit for our program, right? And then obviously the schedule of chief and council remuneration and senior manager remuneration, those are important. Okay, so let's review a sample audit. So again, First Nation audits, those main statements, they're public information. So if after this session, you would like to review a First Nation audit for your First Nation, definitely go on the website provided in the beginning of the presentation and get that audit. Okay, so you'll see that the title for the audit is Consolidated Financial Statements. Consolidated just means there is more than one entity. So it could be the First Nation and its Economic Development Corporation together. In that case, I'll just call it consolidated, okay? So don't let the words confuse you. Consolidated just means more than one entity. So then here we have the index to the statement, and you'll see those are all the elements. Now, we didn't speak about management's responsibility for financial reporting. So there is a page in here that says that the responsibility for financial reporting is all chief and councils. This is unique for First Nation. It doesn't happen for any other organization, but that page is there just saying chief and council assume responsibility for the reporting. Next element, like we said earlier, is the independent auditor's report. This is when we want it clean or unqualified. And then we have statement of financial position, which is our balance sheet. Again, the consolidated word here just means all the entities that belong to the First Nation are included in this one document. Then we have statement of operation, which is our income statement of changes in net debt, and statement of cash flows, which, remember, those are more of accounting exercises. You don't need to understand them or even look at them if you don't want to. And then we have notes to the financial statements. This is the additional information. Okay, so here's management's responsibility for financial reporting. Says chief and counsel are responsible, chief and counsel sign here. Then we have independent auditors report. And again, all we have to see here is it titled opinion? Okay, if it's titled opinion, that means it's clean or unqualified opinion, so great, our audit is good. Okay, so now sometimes some auditors issue a report without the title, so it doesn't say opinion here. So then all we have to do is look in the second paragraph here under the opinion section, when they say, in our opinion, the accompanying consolidated financial statements present fairly no material respect. And then it ends there with all the blurb. Now I'm just going to switch quickly to a sample of a qualified report. So in here, instead of saying, in our opinion, the statements present fairly, they say, in our opinion, except for the possible effects of the matter described in the basis for qualified opinion. Okay, so if there's no title here saying opinion or qualified opinion, just read the second paragraph and see if there's any exception. If nothing is saying except for, and there is no basis for qualified opinion following the first section, then you're good. All we want to make sure with the auditor's report that it's clean or unqualified. If there is a qualification, we want to make sure that we understand what the qualification is. If we come across an audit that has a qualification, we need to try and read through the basis of qualified opinion to see what it's saying. Many times it's going to be hard to understand because it's accounting language. And in this case, if we're in a position to be reviewing the audit, we should be able to ask the auditors to explain, okay, what are you qualifying for? What is wrong with our records? We need to understand why they think something is wrong with our records and how we can fix it, right? Okay, so that's the auditor's report. We spent quite a bit of time on it because I think that's the most important part of the audit, really, right? Signed by the auditors. Okay, so then next thing is our balance sheet, a consolidated statement of financial position. Now, in our previous sessions, when we talked about financial statements, we spoke about First Nations having a different presentation for a balance sheet. So instead of having assets, liabilities, and net worth, they have financial assets, liabilities, and then net debt. So the difference between financial assets and their total liabilities. And then at the bottom, they have non-financial assets. What are non-financial assets? These are all your capital assets, all your land, buildings, equipment, all the long-term capital assets are considered non-financial because you can convert them into cash in a short term. Okay, so by this net debt number, the government wants to take all the assets that are easily converted into cash minus all your debt and see how you're doing debt-wise. Is this net debt number increasing or decreasing or remaining stable? Now, obviously, we're better off, like our statements look better and show a better picture when our debt is decreasing, right? So when we review First Nation financial statements, pay attention to this net debt number and make sure that it's actually decreasing. Okay, now you will see here that for this First Nation, my liabilities exceed total financial assets by 7 million, right? So it's kind of a negative 7 million number. It doesn't look very good. But you got to remember, it's not uncommon because majority of my investment would be in those bigger assets, in lands and buildings and housing and schools and health office, right? And so after you add in those non-financial assets, you're going to have a positive number. Okay. So the only thing when we review this balance sheet, we really want to focus on, is my net debt increasing or is it decreasing, right? So in this case, it's decreasing, right? So that's a good indication. And then we have our accumulated surplus. So that's surplus from all the years, including the current and all the past years. So is this increasing or decreasing, right? Because obviously when it's increasing, our government thinks that our financial management is good. And when it's decreasing, then it's a flag. That means we have losses. Okay, so those two numbers would be really important to kind of review. And you know, I have to mention that for every audit, we have the current year, which in this case is 2020 in my example. And then we also have previous year for comparison purposes, so that we have a benchmark to see how we're doing compared to the past. Okay. Another thing to note is on the balance sheet, we have note references. So remember those notes to financial statements that provide additional information about your audit. So some notes are considered very important. So if they are important, they'd be indicated and referenced here. And here we have a contingent liabilities note. Contingent liabilities are lawsuits, okay? So if you have a contingent liability note, you may want to go to that note 12 and see what's in there. Contingent liability sometimes can be not necessarily a lawsuit. It could also be, so for instance, if we get funding and, you know, the government gives us funding, but at a later date, they'll review our surplus or deficit, and they have the ability to recover some of the funding that they gave us. So many times the contingent liability would be that we're just not sure if some of the funding will get recovered. Okay, but definitely if you see contingent liability note, that's something to look at and review. Now you'll notice here note references, right? So different items on the balance sheet have note references. So we wanted to know what's in our accounts receivable. We can go to note 3 and check what they consist of. Now, balance sheet is signed by chief and counsel. I just removed their signatures for confidentiality, and normally you want a quorum from there. My next statement is consolidated statement of operation or my income statement, right? Again, consolidated means all the entities for this First Nation are included in here. In our session on financial statements, we spoke about the presentation for First Nation audit. So it's not very meaningful to us because at least, well, revenue section may be okay because it lists revenue by funder, right? So we have ISC, we have First Nations and Inuit Health and so on and so forth, right? And then for expenses, it summarizes expenses by program. So instead of the expenses that we're used to see, like say wages and benefits, travel expenses, repairs and maintenance, here was just see total expenses by program. So really for analyzing how well certain programs did, this is not a good source, right? So here what we can see is the overall financial picture. So for instance, we can see that overall in 2020, this First Nation, the revenue was $25 million versus $27 million in 2019. And this is where we would want, we can see which funder gave less money and we can ask questions, okay, what happened? What probably happened here is a capital project in 2019 funded by ISC and no similar project in 2020 or not to the same extent, okay? So now for a big picture, we can see total revenue, we can see total expenses, and then our annual surplus or deficit. Okay, so now we spoke about it in our previous session as well. The way First Nation financial statements are presented sometimes it's deceiving. Sometimes when you see this annual surplus of $8 million, it kind of looks really good, right? But the problem is the majority of the surplus may be restricted for using for certain purposes. So out of the $8 million, maybe $7 million is a capital project. Maybe we're building a nursing station. So we receive that money. We receive that $8 million, but we can only spend it on building the nursing station. So it really is not $8 million that can be spent on our operations, right? So whenever you see a big surplus for First Nation income statement, this is where you start questioning. Okay, I want to know how much of this is restricted and how much of this is available for use in my operations. So for me, we'll go through the audit review process, but just because it flows with the explanation here, what I do when I see that, when I see big surplus, I really want to know how much of that is restricted. So what I do is I go to the last note of the audit, and it's called segment disclosure, which is just an accounting language for departmental summary. Okay, and then I can see here which programs had an actual surplus and which programs had a deficit, and I can determine through here how much of my surplus is restricted and how much is available for use. So here I can see that my governance and administration had a deficit of $186,000, definitely not an $8 million surplus. Housing had a deficit of $500,000. Community services, a deficit of $600,000. So then I'm going to keep asking myself, what happened? Where did the $8 million surplus come from? And here I get to the capital projects. Remember those capital projects, if I'm building a nursing station or a school, the government gives me money, it's my revenue, but I can only spend it on that nursing station. It's not available for operation. So I can see here that out of the $8 million surplus, $7.7 million belongs to those capital projects. And it's not a real surplus. In a way, I can't use it for operations. Okay, and I go further, small deficit in social services and childcare. Health has a small surplus, economic development, small deficit. Okay, education, deficit of almost $400,000. Then I get to ban entities, which in this case is own source revenue. And you see that there is a surplus of almost 2.5 million here from own source. Now that is available for use, that is not restricted, right? Because it's own source, it's not funder money, which is good, except this surplus in the first place has to cover all these other deficits, right? So education, band, housing, all these deficits have to be covered, and whatever is left, that's available for operation. So remember how we had here, let's go back to the income statement, statement of operation. We had $8.5 million surplus here. Well, 7.7 of that was a capital project. So I can't use it for anything but a capital project. So really, I do have a surplus here, right, of about $800,000 because I did pretty well in the own source section, those then entity segment that gave me that surplus, right? So there's still a surplus here. But my whole point is whenever you see a huge surplus in a First Nation income statement, definitely go to that last note and see where it comes from. How much of that is restricted and how much of that is a real surplus available for use. Okay, that's the main point here. Okay, next statement is the changes in the net debt. So I'm going to suggest right away that you don't spend much time on this because this is an accounting exercise. Same with the statement of the cash flow. It really is an accounting exercise and not very meaningful. Now we get to the notes. Okay? And in the notes, like I said earlier, some of them are going to be just accounting motherhood, and we shouldn't spend our time on it. Now, in note 1, remember how we said consolidated financial statements means it includes all the entities owned by this First Nation. So in note 1, normally it lists what entities are included. Okay, so it says here there is First Nation programs as well as some economic development corporations here. Okay, so if you want to know what's included in the consolidation, you can look in note 1. Now then it continues to accounting policies and basis of presentation. This is where you can just flip those pages. That's what I do. Well, if you having trouble falling asleep, or if you in school taking accounting, definitely read that. Okay, so then the rest of the notes, they really just provide additional information. So you know how we saw in the balance sheet note reference for different items. So this is where we can see those different items break down. So for instance, long-term debt note, these are our bank loans. So if we wanted to know what they consist of, we would review that. In particular, we'd pay attention to whether there is any new loans, right? In this case, I don't see any, but you could, if you're interested, you could see that information in there. Again, some of the notes that don't really speak to you, don't read them, right? Lots of them are just for accounting purposes. Okay, the one note that I wanted us to read is that contingent liability note, right? Remember when we said contingent liabilities or lawsuits? Well, let's see what it says here. Well, here it says the First Nation receives funding from various government agencies based on specific program needs and budgets, and allocates certain expenses to the various programs. In many cases, the funding agent has the right to review the accounting records to ensure compliance with the terms and conditions of their agreements. At this time, no estimate of the requirements, if any, to reimburse the agencies can be made. Okay, so basically this says if there are any funding recoveries, they're not included in the audit. So this contingent liability note is not something earth-shattering. Now, sometimes you go to a contingent liability note and you learn about the significant lawsuit against the organization. So important to review that one. Okay, and then another note in here that you may want to look at is related party transactions. So related parties can be related companies, right? All those economic development corporations. It could also be related individuals, right? So sometimes if that note is heavy, if there is a lot of information there, so I'm just trying to move stuff around, so we go back to it. There we go. Then you have a disclosure here. In this case, there isn't really anything, but that's something that we want to look at if we're interested. And then again, the segment disclosure. So normally it's the last note, the last schedule in the audit, and it's very important because then you can see how much of your surplus is restricted and how much is available for operations. Okay, so that's about it for the main audit. Now let's go through our schedules of revenue and expenditures. So remember how the main audit, the purpose is to help government, help our members and leaders understand whether overall financial management is good, right? Overall performance of the First Nation. Now, those schedules of revenue and expenses, they go by program. And so for each program in the First Nation, they will show an income statement, the revenue and expense. I'm just trying to get one here. Here's one for band support, right? So it shows all the revenue coming in. It shows all the expenses in the way we're used to seeing them. So there is, wages and hydro and insurance expenses, all the expenses we see in our system. And then it shows a profit or loss in the end, or surplus or deficit. There's also a budget that's included in here. And so we can see variance, we can see the difference from last year and from budget in here as well. So those schedules are really important because this is what our government agent going to use to decide whether we have to repay any of the funding, right? So my approach is always to get program managers to review schedules for their programs. I'm trying to get to a meaningful one here. Okay, and so program managers can tell me if they're right or wrong. So if there is a recovery at some point for a certain program, then the program managers would have reviewed and approved it, and it's not coming back to me, right? So so there was a project here, I guess a capital project carried over from previous year. Again, when I review those schedules, I really pay attention to whether there is a surplus or deficit. A small deficit is always preferred, right? Because if there is a surplus, there is a chance that we have to repay it, or at the very least, we have to carry over and spend in the previous years. Okay, so every program in the First Nation would have a schedule like this, including government funded, including capital project, including own source revenue. Okay, so it's very, very important to go through those and make sure they're accurate. Many times what happens is our expense allocation within the accounting system is not accurate, right? So a certain program can show a big deficit and another program is surplus. So this is what we do when we review the schedules. We can tell the auditors, okay, some of the travel and band support really should go to AgDev because we initially reported all as band support, or really it belongs there. Now, the main audit, our 30 pages one, the big picture one, that has an auditor's opinion, right? So the auditors do a lot of work on the big picture. The schedules that actually are more important to the funders than the main audit in some ways. The schedules are not audited. They provide what's called a notice to reader for the schedule. So what that means is they don't provide an auditor's opinion and they're more flexible with reallocations. Okay, so whenever you review the schedules, if you need to make reallocations, your auditors would work with you. And if they don't work with you, you change auditors because there's no reason for them not to work with you on the schedules. Okay, just for the sake of time here, let's move on to the next. Okay, so I just wanted to point out CMHC Housing has a separate audit. Okay, so just it has a separate auditor's report and it has a separate audit, which is, it has a certain presentation that if you deal with that program, it's a good thing to learn what it's like. Just for the sake of time, we're not going to go into it, but it's a separate small audit, separate from the main audit, even though CMHC Housing is included in the main audit. When it says consolidated, that means including everything. So CMHC Housing is included as a department in the main audit, but it also has a separate audit because it's CMHC's requirement. Okay. Now, next one is Chief and Council remuneration. This one doesn't have an auditor's report as well. It does have a review engagement, which is one step below an auditor's report. But, you know, again, this one, the auditors are not quite doing the same extensive and strict work and approach on this one. They're definitely open to things like if there is an error or something needs to be reallocated, they'll work with you. So you will see here names aren't mentioned. You just have chief and counselor, but this is just for confidentiality purposes. In the actual report, the names are mentioned. Okay, now comes the point where I have to blow my nose. Excuse me for a second here. Okay. Okay. So when you see this report for your First Nation, it would have actual names. So you'll know which counselor makes, how much they make and how much of travel and other expenses are there for them. Again, the members seem to be very interested in this one at the band meeting. Okay. Okay, next one is the unelected officials. So all our senior managers, all our program managers, whoever is making more than $50,000 is going to be included in here. Again, it's not an auditor's report, so there is you know, a bit more flexibility of working with us. And you'll see here, names aren't mentioned here, only the titles. But you know, we only have one director of finance, right? And one band manager. So we all know who that is. So again, when this report is prepared in a draft form, if you know some of these senior people may be unhappy with whatever is in there, you may want them to review it ahead of time, ahead of finalizing, and tell us why they think it's incorrect. Okay, for one of my First Nations, I go through this with one of the directors every year where I show her the numbers and she says, there's no way, it's completely incorrect. I don't make this much. And I say, yeah, you know, this is why I'm showing this to you. I asked the auditors for the details and then she reviews it and she comes back and changes it by maybe $500. Every year we go through the same thing. So it ends up being correct, but at least she has the benefit of not being surprised by this report. She reviews it ahead of time and approves it. Okay. And then here's the management letter, right? Remember the letter where the auditors have all sorts of recommendations about our operations. So these auditors that for this First Nation, they also provide some financial statements analysis in here, which, you know, if we're interested in, we can read. And then they get into the recommendations, and some of them are actually really useful if you look at it. Well, they say our replacement, same issue replacement reserves aren't funded. Okay, it's kind of a common thing for sure in Manitoba and Northwestern Ontario. So they have to point it out because it, you know, we kind of have to fund them, but unfortunately it's hard. Now, basic needs shelter allowance. So rent for social clients, right? For income assistance clients. This particular First Nation has not claimed any rent from IFC. And so that's a good catch on the auditor's part, because now the First Nation has the opportunity to say, oh yeah, look at all this funding we're missing out on, and go back and claim it, right? So there is some other stuff here like GST payable that the auditors considered unpaid, which, you know, is only relevant to this First Nation. But this is just an example that the auditor's report can be meaningful and is definitely important to understand what's in there. Okay, so let's quickly go back to the presentation here. I know I took up a lot of time reviewing the audit. So here is just a quick recap of how I review the audit. I noticed the time period of the financial statements, because sometimes, you know, I may be thinking about the current year, but really the audit is for last year. So I just need to remind myself this is the year we're looking at. I review the auditor's report to see if it's qualified. And if it is, I try to understand why. I go to the income statement and review the bottom line. Is there a big surplus, right? And if there is a big surplus, I go straight to that segment disclosure note, which is my schedule by program, surplus by program. And I try to understand how much of that big surplus is an actual surplus and how much is just capital projects or something I can't use for anything else. All right. Then I go back to statement of operation, to my income statement, review the total funds and total expenses compared to last year, just to get an idea. Did ISC give me more money, less money? Maybe I made more non-source revenue, just an overall idea, comparison to last year and maybe to the budget. Okay. Now, next step is my balance sheet. The statement of financial position. Remember the two numbers. The net debt, is my debt increasing or decreasing? The accumulated surplus, my total earnings throughout the years, is that increasing or decreasing? And then I also look at long-term debt, which is my bank loans, right? Is that increasing or decreasing? Because I always want to know, are there significant new loans, right? Because if they are, I want to know why. Okay, now if I do have significant change in long-term debt, I may go to long-term debt note. Remember that note that listed all the loans and see what happened there. Okay, just get more details. Okay, and then back to the balance sheet, I review my non-financial assets, which is land, buildings, and equipment. Is there a change? Because if there is, you know, if I see a big bank loan, maybe there is a new bank loan for $10 million, but then I also see an increase in my land and building, then it gives me an idea that there was just an investment in more houses or community buildings. Okay, now the rest of the notes, the financial statements note, I just skim through. Anything that doesn't seem meaningful to me, doesn't attract attention, I say, okay, accounts and motherhood, not interested. Something attracts attention, I ask questions. Okay, if I want to know about something, remember, I don't have the knowledge that the auditors have. So my job is to review what they produce and ask questions. Okay, contingent liability note, important to read. Are there any lawsuits? Because I want to know if there are any. Okay, now segment disclosure. Again, I may review more in detail just to see which programs have deficit and surplus. And then when I have the segment disclosure summarizes, say all band programs, all education programs, all health programs, right? So I can see the total. But then after I do that, I go straight into the schedules of revenue and expenditures. So that second document that's like 100, 120 pages. And then I review every schedule, like at least skim and look for surplus and deficit and see if there is any issues there. Like if I have a big surplus somewhere or a big deficit somewhere, I want to understand why. Okay, and then I review the remaining documents, remuneration schedules. Again, I give the courtesy to chief and counsel and senior management or program managers to review their compensation prior to publishing those schedules, because I don't want them to be surprised, right? Management letter with the recommendations auditors give, I try to understand, ask questions, and if I disagree with any of them, then I argue with them, right? I go like, okay, well, maybe you don't understand the process. Good. Okay, thank you for your time.